Okay, welcome to the Nashville Current Podcast. I am your host, Ed Clay, and I am very excited about our podcast guest today, Peter Girr from Wise Token. Peter, how you doing today?
I'm doing fantastic, man. Thanks for the invite.
Oh, man, thank you for coming on. I mean, I have a lot of great guests. We have a lot of great guests here, but I'm about as excited for your interview as I have been in a very, very long time, because it is a technology that is disruptive in a way. It's decentralized. It's powerful, and it could be revolutionary in a way, much like blockchain, much like Bitcoin has been. And it's a chance for people to get educated by somebody who's founding what could be a revolutionary company. So, Peter, thank you. Very excited.
Yeah, thank you. Yeah, as soon as I discovered, liquidity pools and realized how they revolutionized what was possible to do in creating markets, I knew that this kind of thing was possible. So I'm very excited that the technology now exists, because when I discovered cryptocurrency in 2017, like I didn't even know about it before then. But when I did, I was like, wow, this is a revolutionary technology. But I didn't feel like I had all the pieces to do an actual legit currency that could actually work until that liquidity pool exchange concept came up.
Sure. Well, I think that you've done it with this. What is your background in blockchain? How did you get involved?
Well, I'm from a military background, so I've been in the military since 2007. I went to Afghanistan 2010. I am now an intelligence officer in the U.S. Army National Guard. So that's like my part-time thing. Ever since I got back from Afghanistan, I've been an entrepreneur. So it's mostly been like real estate. And so I think it was just my knack for gaming, actually, that helped me understand how cryptocurrencies worked. I love playing games on my free time. Like I got pretty good at several of them over time. And the thing with competitive gaming is their ecosystems. And so they're ecosystems, but they're less complex ecosystems than the real world, because they have a finite amount of parts and variables, and you can figure them out really well. And so that, for me, translated very well into cryptocurrencies, because it's like if you were to try to like crack the code on just the economics of the entire world, it would be very, very difficult, because there's just so many factors and things you'd have to take in. But if you're trying to understand a cryptocurrency, it's actually much, much easier, because there's a finite set of rules. It's just basically programmable money. And so that's what really drew me to cryptocurrency. I think that I picked it up so well because I was already, an expert in understanding these types of systems. And like that's pretty much how I got into it. Like as soon as I saw blockchain, I was like, wow, this is amazing. And I started just reading white papers and looking at any YouTube video I could find about how this stuff works.
Well, so, it's amazing. Just 2017, it's not that long ago, but I think it does go to show that when people grasp the concept of what's going on and what it can do, that they can take, quick action and make something like this.
Yeah. Yeah, I was very excited. Yeah, if you told me in 2017 that I was going to make my own, I would have been like, no way, man.
Oh.
But it's pretty cool to see how the technology has evolved, because back in 2017 we didn't have the infrastructure. We didn't have really all these Ethereum dApps and stuff. We didn't have credit cards and debit cards that you could purchase things from anybody that takes Visa, that actually takes cryptocurrencies and stuff like that. So I feel like the infrastructure is there now, and this just all came together in such a great time. We got Bitcoin all-time highs yesterday. It's amazing.
Yeah. Yes. So for this podcast, for people in Nashville, there's kind of a couple different groups, and for those that have never heard of blockchain, what would you say blockchain is? They might have heard of Bitcoin. And
Sure.
what's the difference between blockchain and Bitcoin, just to kind of give everybody a basic understanding?
Yeah, sure. Blockchain is the underlying technology that makes Bitcoin possible. So blockchain technology is the technology behind everything that is revolutionizing the world. So, and I would say that blockchain technology, that concept is akin to like before the internet and after the internet, where it's fundamentally better than anything before it. And in the future, pretty much everybody will have to be using some type of blockchain technology in order to survive. Just like if you're not on the internet nowadays as a company, it's pretty hard to survive. So blockchain is a consensus technology that allows you to not have to trust anyone, because the system itself provides consensus and trust just in the algorithm itself. So the most simple way that you can understand how that's effective is Bitcoin, which is just a simple digital ledger. So just like an Excel spreadsheet that says, very first transaction, 10,000 Bitcoin paid for one pizza. So imagine Bitcoin as this big Excel spreadsheet. That's the digital ledger. It's that no one can change those entries after they're made. And the reason no one can change the entries after they're made is because once a digital block is formed every 10 minutes, that means that every single computer server, connected to Bitcoin, that's all the Bitcoin miners, are reaching a consensus every step along the way. So it's something that you can trust because you've got the whole world of computers reaching consensus every time a new entry is made. And that's where the trust lies, because if that ledger says, Peter has 3 Bitcoin in this wallet right here, that that's not something that can ever be rewritten or taken away. And that is the power of that technology, because it's immutable.
I see. So I asked I called 10 friends, all millionaires, not necessarily in Bitcoin, mostly different businesses. Pretty much everybody invests in crypto in some way though. And I had them send me some questions. So I'm going to ask some questions here from, I'd say, seasoned regular investors, not necessarily crypto investors, but some really, really good questions. So what is Wise Token and how is it different than other cryptocurrencies?
Sure. So we talked about Bitcoin for a second. Wise Token is actually built in the Ethereum network. So we talked about how Bitcoin is awesome because it's this ledger that's immutable. It can never be changed. It's provable. You can't print more of it because there never will be more than 21 million Bitcoins, and that's provable through code. So that's awesome. But Bitcoin is kind of primitive. In the fact that all it can do is be a ledger. If you wanted to build products on top of Bitcoin, that is kind of difficult. So there was this guy called Vitalik Buterin who basically put together a company and made a different cryptocurrency that is now the number 2 cryptocurrency in the entire world, and that is called Ethereum. And so what Ethereum does, it's not competing with Bitcoin. It does something completely different, and that is it gives you the ability to program money. So you can make programmable cryptocurrency. So that's what Wise Token is. It's a cryptocurrency that is programmed. So if you know anything about Ethereum, it's the number 2 market cap. Tens of billions of dollars in it. It's the number 2, and everybody wants to get more Ethereum. And so what Wise is basically additional programming on top of Ethereum so that you can have the additional features of being their bond-like features where you can lock up Wise tokens over time, earn more, and then cash out back into more Ethereum than you started with. So our entire project is based on Ethereum. The goal is to get more Ethereum, and we have basically built the best way to earn more Ethereum in the entire world.
Yeah, so let's talk about that. So it's backed by Ethereum. People are putting in Ethereum. So in 2 ways, it can pump into. So if Ethereum's going up, it'll have that positivity pushing it up, and then if the market's saying that Wise should go up too, you might have like a double pump sometimes, right?
Yeah, that's the really awesome part about having a asset-backed cryptocurrency. As soon as I discovered cryptocurrency, I was like, oh wow. I'm like, when is the asset-backed version going to come out? That's what I wanted from the start, because cryptocurrencies are cool, but what I never got was why people would send tens of millions of dollars for a concept. They're basically and that the money put in actually back the act, like literally back, like because we had these tens of thousands of ICOs, and the money for the ICOs doesn't directly back your investments. It just goes to whatever, marketing, the founders' pockets, or it's a complete scam and they just run off with the money. So I was like, man, like the technology is here. When are we going to have the asset-backed version? And so as soon as this liquidity pool technology came out, I was like, bam, that is it. Because having a liquidity pool and being able to create a market with a liquidity pool rather than just a regular exchange is the last piece of the puzzle you need to make a seamlessly backed crypto, to back crypto with assets. So what happened with Wise is 96% of the Ethereum coming in to buy Wise, that Ethereum is actually going into the liquidity pool on the exchange, and that backs up the entire market cap. So when you send Ethereum to buy Wise, it doesn't actually go away like in 99.9% of other cryptos that you invest in. It doesn't go away. It goes on to Uniswap, and then it backs up your investment, because once the money comes in, the contract sends it to Uniswap, but then it burns the keys. So it's not like the Wise Foundation owns that pot of Ethereum. No one owns that pot of Ethereum. It's everybody who bought Wise owns that Ethereum. It's backing the entire project. And then future investors, when they go to Uniswap and want to buy Wise too, well, they got to send Ethereum to buy Wise. That increases the pot of Ethereum backing it, and it just allows it to grow. So 99.999% of all of the cryptos, you send your money in whatever form, and you just lost your exposure to that asset that you purchased it with, because they basically took your crypto for this new thing that hopefully works out. Mm-hmm. With Wise, you don't lose your exposure to Ethereum. You just gain additional exposure to Wise that allows you to earn more interest and cash out for more Ethereum when you're done. So that's the exciting thing about this project. Like that's why I'm so excited about this.
Yeah. So it's asset backed. So it's backed by Ethereum right now. There's about 40,000. Actually, I should know this, but about 40,000 Ethereum last time I looked, I think.
Yep. 41,000, almost 42,000 looks like.
Yeah, 42,000 Ethereum. That's what, 26 to 30 million dollars already backing this. So, compared to other cryptos, how much liquidity do they have in comparison?
So pretty much like 1/100th of that. You would expect to see with other projects less than $100,000 to start off. If they're really, really good projects, they might start off with $1 million in liquidity if they're really, really good. But honestly, like of the hundreds of projects that I've looked at this summer, that it's under $100,000 is what they usually start out with. And the reason why that stinks is because, say you're an investor that wants to invest $10,000. If the market for that token is less than $100,000, then you can invest $10,000 if you're a sane person, because you're immediately going to lose a huge portion of that to slippage, buying in and cashing out as well. So that's just with $10,000. What about people that want to invest $3 million? So having a big market is what you really, really need in order to become any type of long-lasting successful cryptocurrency. So we're starting off with 60 million at least, and we already have people that have invested over $1 million in Wise, and they're not biting their fingernails because they know they can easily cash out millions of dollars and have minimal slippage, compared to you just can't do that in most other projects.
And one of the things that you've done different too, a lot of times with these launches, the founders get a bunch of coin. And so it's really geared for, even if it's geared for other people to make money, it's really geared for them to make the most money. One of the things I've appreciated about what you've done is you've taken that personal financial incentive away, and you're also investing your own Ethereum. Talk about that and why that's important to you.
Sure. So the norm ever since, Bitcoin came out, which was completely fair. It was even better than a nonprofit. It was a complete charity. Like Bitcoin was a charity to the entire world for everybody to use. And I think that's one of the reasons why it has a 400 billion plus market cap right now, because it was built that way. every single other cryptocurrency that I know of after that has not been a charity. It's been the Silicon Valley model where it's like, well, we want to build this golden parachute in for us. We got these seed investors that need to get paid up front. And that just destroys the efficiency that's possible with cryptocurrencies, because when you're paying yourself up front and when you're like, putting this golden parachute just because you built the token, you just cut yourself off at the legs, in my opinion, because you don't have the ability to grow or have a grassroots movement or even want to have people building inside your ecosystem because they're already at a serious disadvantage because you just rewarded yourself with such a big portion of the supply yourself. So 0 team tokens for Wise. I don't get any tokens. My team doesn't get any tokens. We got to buy them on the market just like everybody else. And the way anybody buys it on the market, it's perfectly fair. There's just 50 days of auctions. Completely fair. The more Ethereum you send in per day, the more expensive it's going to get. It's just a Dutch style auction. And that's already on top of the fact that 96% of that money actually goes to backing the entire project. So I think that Wise has a much greater potential to reach that, billion-dollar market cap. I think it won't be hard for us to reach a billion-dollar market cap starting with 50 million. But what I'm really going for is to be like one of the top cryptos, which is much, much farther than that. And I think that if I did any other strategy where, I controlled like 20% of the tokens or something like that, or there was ongoing profits, then I think that would cut me off at the legs from reaching that goal, because who would want to build products in my ecosystem when I already control 20% of it for free,
Sure.
when I didn't pay money for that. So I think building it this way, it just is such a better strategy. I mean, look at Ethereum. Ethereum's number 2, and Ethereum is a for-profit company for sure. But the programmable money aspect of their ecosystem is completely fair.
Right.
I didn't have to pay Vitalik any money to create Wise in his Ethereum network. So it's his Ethereum network. Anybody can create an ERC20 token and upload it. It's completely free. And so I think that, more projects should take the hints and be like, hey, you can do a lot better if you create a fair playing field for everyone else. Because if you do that, then if your product is good and people like it, well, then why wouldn't people pile in? Because it's a free market and they could bring their business to you rather than having to compete with everybody like all at the same time.
Well, but what you're talking about, I mean, that's one of the reasons I like this project so much, because you're kind of putting your money where your mouth is, right? This isn't just like you get a dump of tokens. You're putting your own Ethereum in there. I mean, it's impressive, because you could have even taken, you could have taken something and I don't think anybody would have said anything. So thank you for that. That's actually one of the main things that's got me really liking this project, that you're putting your own Ethereum in. You believe in this so much. You said, well, that idea, even your team, that idea is amazing, because you said, I don't see why other people don't do this. Well, probably they might not believe in it like you believe in it. You believe in this, you have this vision that this could be revolutionary. And that's why it's powerful, Peter.
Yeah. Thank you for that. Yeah, it's pretty hard for anybody to say that I don't believe in my product with all this stuff. But yeah, I absolutely believe it can be revolutionary. I don't have any big companies. I don't have any big investors. But the cool thing is, the people that do have big companies backing them and big investors backing them, those are the ones that aren't fair and that probably aren't going to win in the long term, because they need a big cut of it up front. So I did not back in 2017, to make a cryptocurrency, it would be like, $250,000 or more just to even fork Bitcoin, which is nothing. And the technology we have now with the Ethereum network, it's so much more cost efficient, and it's so awesome. Anybody can create whatever idea they want and program it and upload it to the Ethereum network. So I think that that there's going to be a lot more with this kind of mentality of, hey, first of all, step one, you need to create a fair. You need to have the money that people pay actually be backing the entire project. But I think we're going to start to see more like following Wise's lead after this, because first of all, if we're successful, a lot of people are going to want to, you know, take the concepts, but also two, it's just so much it's so much easier now to be able to create a cryptocurrency. I think some people don't realize that that you can actually do it, and it's fairly cost effective, especially if you know some good developers.
Yeah, so I've got speaking of not having any big backing, one of my friends who's actually a whale, he says he asked me to ask you this. He says the team seems light on crypto related experience. How are you dealing with that, the lack of that for this?
Well, so yes, if you look at our resumes, we haven't built any other cryptos. We haven't like been in the blockchain space for a long time. My developers, however, do have the experience of building, and their work speaks for themselves. But basically, I don't get that question much, because people just see the competence of what we're doing. We took a year to build the code. We got our third party audits before we made our code go live. We made our code live. Even after these audits, we're still hosting this 100 Ethereum reward bug bounty, which is like over $60,000 now. Everybody can look at our code. We have a meticulously written white paper. Like it's just like the competence of what we're doing. It just really shines a bright light compared to what the norm is in the space. Because it seems like this summer, the norm was anybody that can write code could copy and paste some farming token, put their little tweak on it, put up a slick website, and then go. And it's so apparent that Wise is done, very well planned, meticulously made, all the I's dotted and the T's crossed. And like, I really haven't gotten that question very much, because the product just speaks for itself, honestly.
Yeah, and now you are similar to other products, but better in a lot of ways. Talk about Hex, for instance. What makes Wise different than Hex, and why is it better?
Sure. So I was the biggest investor in Hex when it started, besides obviously Richard Hart himself, who controls a lot. So Hex was the final straw for me, because when I first discovered Hex, I was like, ooh, this might be the one, because of the decentralized nature of the staking system. So what I love about Hex is that the whole staking system is completely decentralized. You stake from your private wallets. When you're done, you mint them from your private wallet, and then you go to Uniswap, and then you cash it out for whatever return that you have made. I love that. That thing doesn't exist in MakerDAO or any other these places where you can technically make interest, yes, but you don't have full custody of your crypto at all times. So I love the custody idea, where you always are in control, and we definitely have that, from end to end in Wise as well. But what Hex is lacking is the backing of assets. So in Hex, you send your Ethereum, well, 100% of that Ethereum just goes away. It's not for your benefit. Now you're only exposed to Hex. You're no longer exposed to your Ethereum. And honestly, I didn't appreciate the origin address either, because it's 50% of all early end stake penalties go to the origin address, and which already has 50% of the supply anyway. And so I just don't appreciate one entity having so much control over the supply. So like, yeah, I was a big investor in Hex. I made a lot of money in Hex too. It was the closest thing up to that point that I had found that was kind of what I was looking for. But with Wise, we not only have the end-to-end decentralized system, but we've paired that with the technology of being asset-backed by Ethereum. And we also have several other improvements, like for instance, our referral program. It doesn't die after launch. It continues to reward people. So after launch, if people use your link when they stake, you're going to get 10% more shares. And then you, as the referrer, are going to make residual income, which you could collect daily from those people that have made stakes, as long as the stakes are at least 365 days. So we have a referral program that just works forever. It doesn't die, and it can provide new users for decades to come, because you still make money after launch. And also, you can stake for up to 42 years with Wise. I probably wouldn't recommend that. That's a long amount of time to have your money locked up, but you can. And so there's just many ways where it's more robust, and there's just so many additional features as well. So, and that's just the base layer. We're also building a lending contract on top of that, and an insurance contract. So you just don't have that functionality with any other crypto.
Yeah, I want to get into the staking. I want to get into lending and all these other things. I want to point something out that you said, though. With Hex, they've got about what, 3 million in liquidity, somewhere around there.
I think it's like 5-6 million
5,
now,
6.
but yeah.
Point being, when this launches, you might have 10x the liquidity of Hex.
Yeah. If we launched today and just like stopped everything, we would already have over 50 million in liquidity. And so the point is, like, if you were a big investor in Hex and wanted to cash out right now, the most you could drain out of that liquidity is like 4,000, 5,000 Ethereum at the very most. With Wise, you can literally cash out everything with no issue. You have tens of thousands of Ethereum backing up the investment, and it can't be rug pulled. Like with Hex, somebody owns that. Somebody can take that liquidity away if they wanted to. They could put more in. They could take more out. Like it's all controlled by an entity. Where in Wise, it's ownerless liquidity. After the contract creates that liquidity, it sends the keys to a burn address. So even if so let's say the worst happened and 100% of people sold all their Wise. That would tank the price by 75%, and 50% of the Ethereum would be removed. So if that happened right now and everyone sold their Wise immediately and there was no more Wise on the system, it was all on Uniswap, like our liquidity would still be like 5 times bigger than Hex, and even after everybody selling. So that is the power of using 96% of the money to actually back people's assets, rather than just going not to your benefits and then just having to rely on whoever's providing the liquidity.
Outside of Wise right now, do you like any projects that, is there anything that you're really looking at?
The graph token. So our website is built, like our backend uses that technology. So Web3 technology is huge, and like the graph token's most likely going to be a pretty big thing, because everybody's using it for Web3. Like Uniswap uses that technology. We're using that technology. There's a bunch of other big names that are using that technology as well. So I'm not surprised as soon as it's hit the markets, it's gone up significantly. I think it went from 3 cents in pre-sale to like 26 cents today. So I think that's a great project. But that's the only one. I haven't done a whole lot of research on other projects because we're like literally in the middle of our launch right now. But the graph token is definitely one that stands out.
No, that's good. And currently I'm kind of the same way. This is my focus right now. I mean, I've got some other crypto investments, but I think this is going to be really big, first revolutionary type product that I've seen come out in a while. Talk about staking. A lot of people don't understand this, and just need some basics. First, what is staking? How does it work? And then let's get into some different strategies for staking in the future.
Sure. So staking is basically how we reward people for locking up money within the contract. So if you stake, you can stake for a period of whatever, you get to choose how long you stake for. It could be 1 day, it could be all the way up to 42 years. And so you choose how long you want to stake. And like a bond, it will earn you interest over the duration. Whereas the interest comes from inflation. So there's 4% global inflation every single year. That's actually less than Bitcoin. Bitcoin has inflation as well, but it pays miners. It pays miners every 10 minutes to be able to complete those digital blocks. We think that's a kind of a primitive way to do it, because Bitcoin miners, they just sell back on the markets and provide downward price pressure. We don't need to have we don't need to reward miners in Ethereum, because we already pay the gas fees to be able to do that every transaction. So instead, the inflation with Wise, we're able to pay the users who stake. So it's really cool. It's like imagine a gold-backed dollar, basically. That's the closest model I can think of. So imagine a gold-backed dollar where all the extra printed inflation every single year didn't go to the banks, but it actually went to you if you have your money in a savings account. That's like how staking would be. So you can stake for any period of time you want. During that time, your money is locked up, and you earn interest every single day along the way. How much interest you make is variable. It actually depends on the rest of the market, because if the more people that stake, the more people you're competing with, because the interest is only the inflation is only 4% annually. So there's a finite amount of money up for grabs, and the more people that stake, the more people are competing and the less interest you get. However, the cool thing about the system is the more people that are staking, the more ROI you'll make, even though you'll make less interest, because in order to stake, you got to lock up the money. When the money's locked up, that you have less supply. And so as long as the demand stays the same or increases, you, by the law of supply and demand, you're driving the price up significantly. So our interest is going to range between 10 and 30% annually. That's the Wise tokens you can earn on an annual basis. But if you're getting less, well, then that's better ROI for you, because more people are driving the price up. So by the time you cash out, yeah, you might have only made 10% more Wise tokens every single year, but the price could have like 10x.
Yeah, I was going to say, so let's think about this. So we'll say you invest $25,000 worth, and it 10x's and it goes to 250. So you're getting 10% per se on the what's now 250. So you're making you're obviously making your money on the 10x, but you're also making it off that interest that's guaranteed.
Yes, and then you get to multiply that by the price appreciation of Wise and the price appreciation of Ethereum, because you cash out into Ethereum. Ethereum is backing the entire project. So there's no other projects that not only give you interest, but also your ROI allows you to multiply not only by the price appreciation of the token itself, but also by Ethereum. So that just doesn't exist. So even if even if let's say Wise 2x, well, if Ethereum also 2x, well, then you multiply by both, and then that's after you already have the interest. So like all these farming tokens that came out this summer, which was after Wise started being coded about, I thought they were kind of hilarious, because they're like a one-trick pony that create hyperinflation, and it's just a game that says, hey, we'll print you all these tokens. They say high amounts of APY. Oh, okay, you're getting 100% APY. You're getting 200% APY. Yeah, except where does that APY come from? It comes from them printing more tokens. Right. So they didn't create any value. And the only way you win in that system is if you cash out before other people cash out. So you like high APYs created by inflation mean nothing. However, Wise is a completely different concept that is based on being backed by Ethereum, and our APYs comes from the ROI you get from Wise token going up and Ethereum going up, not from inflation. Inflation is just a nice incentive to stake versus not stake.
That makes sense. So talk about some different strategies for staking, because what is if you were, well, obviously you will be staking, what strategy are you using?
Yeah, so I will be staking between 1 and 5 years, and there's two reasons for that. Number one is there's a longer pays better mechanism. So you're going to be earning more interest the longer stakes you make, and that benefit falls off hard after 5 years. So you'll still make a little bit more, like it's still better to make a 10-year stake. You'll get more interest than a 5-year stake, but the benefit falls off pretty hard after 5 years. And so I'll be staking from 1 to 5 years. And also, like, we're super, like, 500 million is awesome, especially if that's all in liquidity, but that's still super small compared to where we could be in 1 year to 5 years. And so I want to be able to capture some of that return in the next 5 years. So I don't want to have all that, like what if I made 1,000x? I don't want to have that locked up for a 10-year period before I can realize any of that. Like, it would be nice to be able to build some awesome things on top of Wise as well. So I always recommend between 1 and 5 years. Like this is crypto. Things move fast. If we have put tons of effort into creating something that has massive potential, and if we're going to reach that potential, there's probably going to be a big jump in the next 5 years. So that's why I would recommend that. Also, I would recommend a ladder staking, like making a bunch of smaller stakes rather than one big stake. And the reason for that is because you could make one big stake and then just scrape the interest. We allow people, like the system, the interest you're making every single day, you could scrape it without affecting your principal. But every time you scrape, it reduces your amount of shares, which is your interest earning power. So instead of scraping, which would reduce your interest earning power, you kind of give up your advantage that you had from starting earlier. You could make multiple stakes and just have stakes ending, because there's no penalty there's no bigger pays better. And so there's no reason anybody shouldn't split up into a bunch of smaller stakes. Like, the only drawback is you have to pay multiple transaction fees.
Mm-hmm.
So you wouldn't want to make like too many, because then just the transaction fees from paying the gas are going to stack up. But I'm definitely not going to just roll it into one big stake and then stake it for 5 years. I'm going to have dozens of stakes. I'm going to have stakes ending, after a year's time. I'll have them ending every single month. I'll have some big ones ending every single year. And my time frame is over the 1 to 5 year time period. And past the 5 year time period, like I might have like less than 20% of my stack that is staked for more than 5 years.
So someone invests in Wise token, and they're doing good. All of a sudden, they need some liquidity. They've staked for 2 years. Can they take their money out for a penalty?
Yes. So you can always early end stake. It's just the penalties are pretty severe if you haven't done a large percentage of the stake already. So for instance, if you create a stake and then the day after you're like, oh, I've got to end this, I got to get my money back, it actually penalizes you 90% of principal. So that's pretty severe. If you were 50% complete, it would penalize you about 50% of your principal. So when you create your stakes, you want to think about, hey, is there ever going to be an instance where I actually need to use this? Because then you might want to make several smaller stakes so that you won't have that big penalty. That's another reason to ladder stake, because then you will always have Wise coming due, and you'll never be in a position where you're like, oh, I have to lose a big chunk of my principal because I need the money now. That being said, one of the second layer protocols I'm building on top of Wise is called Wise Insurance. You can stake with a Wise Insurance contract, and you'll be able to cash out at any time with only like a 10% penalty to principal. And the way we do that, like the cost to do that is 10% of your interest, because what happens is only 90% of your principal is actually staked, 10% goes into a vault. And then when you say, oh, I really need the money and cash out, you get paid back from the vault. The contract doesn't actually end your stake. It just pays you back from the vault. And then we have incentives for people funding the vault. And that's how that works. So there's other options available. If you're like, man, I wanna get into the staking, but I might really need the money. Well, you could do the Wise Insurance staking contract, and that would allow you to only lose 10% of your principal and be able to end it at any time.
Got it. So you've also talked, I think you were getting to this, Wise loans from from their investment. How is that going to work? When is that going to happen? And what's that all about?
Oh, sure. Yeah. So lending is huge. Like having this, investments that's basically like an Ethereum bond to earn you more Ethereum. That's a great investment. But to be a true financial suite of products, you really need something that is more stable, and you need some type of lending. Like that's huge in the financial world. So we are also building this product called Collateral Staking that will allow lending. That it looks like will be done in February.
Okay.
And so when we launch that, it's just another way to stake. It's just like a regular stake. You will only be able to stake up to 5 years. So by the way, with insurance staking, you're only able to stake up to 3 years. So
Okay.
we can't have somebody make a 42-year stake, end it the next day, get everything back, and then have the money locked up like that. The contract would fail if that happens. So you can only stake up to 3 years if you want to do the insurance staking option. With a lending contract, it's just like a regular stake, except you can only stake up to 5 years long, which is still a good amount of time. And then once you have made your stake in the collateral staking contract, you can then take out a loan from the contract using your stake as collateral. So for instance, if you have like a $100,000 stake staked for 5 years with collateral staking, you might be able to take out $40,000 of DAI stablecoins, and as a loan. So then you would have some type of plan where you gotta pay monthly payments to the contract. If you didn't make the payments, there would be a small penalty, and then if you completely defaulted on the loan, then the contract would foreclose on your stake. So that's why like $100,000 stake, you could probably get $40,000 of loans directly, and then mathematically, because of our backing process, we know that it would be impossible to lose money. Like even if everybody sold their Ys, we would know that we could lend up to 40%, and mathematically it would be impossible for anybody to lose money. And so with that math, we're then able to allow people to stake DAI, because they're basically fulfilling other people's loans that are borrowing DAI. And so if we charge like other competing products make like maybe 8% to maybe, if they're really lucky, 14% APY on stablecoins. So if we have a lending structure that's the interest on your loan is like maybe 17% or something like that, less than a credit card, more than you want to pay over a long period of time, that allows us to give 17% APY to people who are staking DAI, which would be every single other competitor in the system. So I don't know how much people will want to use lending. Like I don't know how big of a market that is, but if it's big, and it might be, because people might borrow 17% interest, okay, they might want to use it as a way to leverage their Ys position and buy more Ys, because supposing that they would beat 17% annual interest, which is you could probably do that even if it was just Ethereum, let alone Ys on top of that. So I don't know how big this market is going to be, but if the lending market is big at all, then we now have a product that can beat the entire rest of the market as far as lending is concerned. And it's much safer too, because it doesn't rely on price oracles. It doesn't have any outside dependencies. There isn't any type of vulnerabilities that you have with other places, and it's 100% decentralized, which is not true of those other protocols. So like I'm really excited about lending. Like the Wise based protocol is awesome, but I think that the whole lending portion of decentralized finance could be huge, like absolutely massive. And the cool thing about that is, depending on how big the market is, your APY rates could be done in a way that goes with supply and demand. So let's say like you wanted to lend some money to a family member. Well, you could do it through here. You could set your own APY and you could have it provably backed, by decentralized protocols that just kind of enforce the rules to make sure that things happen the way that they're supposed to happen. So there's just so many applications to lending. I'm hoping that the market is pretty big for people who want to borrow money, and I think it will be. But we'll just have to see. That'll probably roll out sometime in February.
Yeah. So somebody like me who has different businesses and wanted to put, let's say I put $1 million into Wise, million USD. I could theoretically in the future take out 40% of that as a loan and do kind of whatever I want with that. And there's code in there that makes it kind of like everything in your system, kind of makes it a win-win, and it covers our basis.
Yeah, exactly. Because so it would be, we're still developing the system, so I don't know exactly what the APYs would be, or some of the finer details. But basically, yeah, if you had $1 million staked with the collateral lending contract now, and you wanted to create a loan, basically you would create the demand for wanting to borrow that much money. And then on the other side, we would now have this APY that could be offered to that much money. So now we'd have like $400,000 worth of people that can now stake and earn the APY, which is basically coming from you in interest payments. And everybody knows it's like nothing can really go wrong, because if you decided to default, well, then it would foreclose on your stake, which mathematically cannot fail to be able to pay out these people in DAI that have stake. So it's really cool, and it doesn't rely on any price oracles, which is really important to me, because there's been tens of millions of dollars, actually over $100 million of dollars, that have been stolen and hacked by manipulating price oracles this year alone. So that's super cool. And like in a bank, think about in a bank, if you want to get like a loan for a car, you're going to pay way more than they're going to reward you for having your money in a savings account. There's a huge delta in between. You make like 0.01% interest in a savings account, but even if you have perfect credit, you're still paying like 4% interest for a car loan. If you don't have I've seen people pay up to like 18% interest on like car loans and stuff like that. There's a huge delta of greed from these big institutions, where we can literally just match people up. Like maybe for the service we charge like 0.5% or something like that, but like we can match people up and provide these amazing services where you can make way more money than you can anywhere else, because we just taken the greed out of it and we're just making efficient systems.
Yeah, it's in many ways it's like being your own bank within your investment, which is I mean it's very well thought out. It's very well thought out. That's what we were just talking about it last night. Like, I mean, there's got to be. I mean, we have to write it out in some different strategies, but there's going to be some really interesting strategies from a business owner perspective who has a brick and mortar type business that this could make a lot of sense for.
Yeah, absolutely. And that's the idea. Like it's way more efficient to use decentralized finance. It's just people need to actually build the products that are possible to build. And now they are, because of liquidity pools like Uniswap, decentralized exchanges and stuff like that. They're just waiting to be built. It's like the internet when it was just discovered.
Yeah, waiting to be built. What type of adoption rate do you need right now for Wise to 10x, 100x? What's your thoughts?
So we're getting about 100 users a day right now, and that's like wallets that are investing in the contract. We're getting about 100 additional per day, and the total they're investing, if you take out the whales, then the average people are investing is about 7 Ethereum. So like maybe it's like a range between like $4,000 to $7,000 basically, where that the average person is investing. So if that continues. And like we only have 5,500 users right now who are invested. If that continues at that same rate, 100 people a day, then our token will literally 100x by the end of 2021. if we continue to get 100 people a day investing about 7 Ethereum. I think that as soon as we hit Uniswap, that's going to be huge, because there's hundreds of thousands of people that use Uniswap. It's the biggest decentralized exchange, and we're going to, land in the top 7 of all the biggest liquidity pools. Our token is going to be the most valuable token besides stablecoins and wrapped Bitcoin on the platform. So it's going to be wrapped Bitcoin, Tether, USDC, a few other stablecoins, and then Wise. We're actually going to be more valuable than Uni, the actual token of Uniswap. So it's going to be impossible for people to ignore us. There's going to be hundreds of thousands of people that immediately see us starting on December 31st. That's like the best advertising ever, to be top 10 on Uniswap. And so I think we are going to go from, 5,500 users, maybe we'll end at like 7,000 users or something like that. I'm pretty sure we're going to go to 20,000 users pretty quickly. And there's no reason to believe that new users would invest anything less than the average, which is 7 Ethereum anyway. And so just that's the numbers don't lie at that point. It's like it just mathematically will have to happen that way. So it's looking pretty good.
Well, yeah, and one thing to think about too is, you have a referral program built in that rewards. I keep saying win-win. This was set up win-win. I mean, everybody wins when we work together. A novel idea in this crazy world we're living in today. Really, there's lessons from what you're doing that could be spread throughout the world right now. Win-win. This is not a selfish thing you're doing. This is a win for everybody if they can understand and see the value of it. Very important. Talk about the referral system that you have. 10%, 10% and 10%, basically. Go ahead and break that one down.
Sure. So marketing is extremely important in crypto, because like 99% of the value in crypto comes from adoption, people actually buying it. Like marketing is and people deciding to buy it. That's even more important than the tokenomics of the token itself, because you could have the best token in the world, but if nobody knows what it does and if nobody decides to buy it, then it's nothing. It's not going to matter. Price is very important in crypto, and so we took marketing seriously. And so we have a referral program, because Wise is nonprofit. We have no income coming to us, and so there's no way we can have like a 5 million budget for marketing in 2021. So we needed the referral program. We're also doing as much as we can to market. Like a good chunk of the startup cost is going to ads on Instagram, ads on YouTube, email campaigns, and other marketing companies that are helping us with that. But since there's no profits coming to us, it was important for us to have a referral program. That being said, referral programs are the most efficient way to possibly do marketing, because in order for somebody to get free Wise from doing the referral program, they have to bring money into the system. So whether that's a whale using his own referral link and putting money in, that's still money in the system, and that still helps the system. Or if that's somebody working really hard to has 100 different people who are all putting money in, there's no way to beat a referral system if it's built correctly, because the amount of money that you make that you could potentially dump on the system to drive the price down, you're bringing in 10 times more money in order to be able to have that 10% to be able to dump in the first place. So that's why we went with a good referral program. And so from right now till December 31st, anybody who creates a link and promotes it can make 10% commission. So literally, if you bring in $100 million through your link, you're gonna make $10 million. So we have some people that have made over $100,000 on referrals already. It's only been going since November 11th. So it's very simple. You can just connect your MetaMask to our website. and you can copy your link. The link redirects to the website. It puts a cookie in people's browsers so that when they invest, that's accounted for your Ethereum address. We also have a bar for entry because you can't refer yourself from the same Ethereum address. You would need to make a second Ethereum address. And then there's also a bar for entry of 50 Ethereum. You don't get the 10% unless you refer at least 50 Ethereum. And so this way, it just adds, it makes it a little harder for people because if anybody could just with one click self-refer, they would just do it. So even though it's no benefit to them, we just made it a little bit harder because we want people to use the links of the influencers that brought them into the system, because why not? And they'd have to go through these steps to be able to make themselves a referrer anyway. And so it's worked out very, very well. We've got over 100 people who have, reached that 50 Ethereum threshold or higher. And like the average amount of money people made from being a referrer in November was over $10,000. So, and like if you go into YouTube right now, if you go into our chat and Wise Token and type !YouTube in Telegram, you can see there's like 50 YouTubers. There's a playlist of 800 plus videos. There's content coming out every single day. So it's working very, very well. And the cool thing is, so right now we have got buys from the contract until December 31st. After December 31st, you just buy directly from Uniswap, so that 10% commissions isn't there anymore. However, your link still works and you get rewarded when people stake for at least a year. So the referral program changes after we are on Uniswap and staking begins. But instead of making just a direct one-time 10% commissions, you are making a residual income every single day based on who's using your link and staking for at least a year long. So the cool thing about it is, let's say you made $10,000 off people using your link, you got 10,000 direct commission, but you're not actually done making money from that event, because if those people continue to use your link and stake for at least a year, you're getting residual income every single day. If the price of Wise goes up and the price of Ethereum goes up, like that $10,000 that you got initially, you could actually make more off the residual income if people continue to use your link. So it's just really well designed, and people are using it exactly as designed. There's no way to, there's no loopholes or ways to like break the system like you see in other referral programs where it's just too easy. Everybody just refers themselves with one click, or some way where you could somehow make more money to dump on the system than you are bringing into the system. It's just not possible. So I'm very happy with how it came out and how people are using it right now. So I had no idea that there would be, almost 1,000 videos of Wise created by organic referrers that just saw the potential.
Well, what's cool about it too is when someone buys from a link, referral link, they get a 10% bonus as well.
Oh yeah, that's the best part. We didn't even talk about that. So I talked about the referrer side, but if you are somebody who is just wanting to invest, you really should use a referral link, and it doesn't matter which one you use. Like obviously
use mine.
The one. Yeah, exactly. So use a link, and you will get not only 10% more Wise tokens when you invest in the contract from now until December, but when you go to stake, you'll also get 10% more shares, which means you're earning 10% more interest. So it's just so simple. It's cut and dry. It would be silly not to use a link because you're just getting 10% more, and that's compounded too, because you would get 10% more tokens, and then on those tokens, your total tokens, you also get 10% more interest earning power. So it's just a no-brainer.
Yeah, no, that's what I said. It's a win-win. I like how it was set up, big time. Well, we're talking about the future, and what do you see in the future? 2 years, 3 years, 5 years, and longer for Wise, and why do you really believe it's going to happen?
Sure. Yeah. So we talked about the insurance and the lending contracts. So within 2 years, I really hope to see that become a really big ecosystem with lots of people lending and lots of people staking DAI stablecoins, not just staking WISE. And I think if it's big enough, we could, like, there's institutional level investors who might not want to take on the risk of staking on a product that's on Ethereum that might go up and down, but they'll stake stable coins for a set APY. And because maybe they have a company that's not willing to speculate on a cryptocurrency, but staking stable coins for a set APY is something different entirely. So I see us reaching those institutional levels if our lending ecosystem grows big enough, where people are not just staking WISE, but we also have a lot of people just staking stablecoins as well. Also, in 2 years, Ethereum 2.0 is going to be completely rolled out. And so I'm really excited to see faster transactions, cheaper transactions, and also point of sale vending. So as soon as anybody accepts Ethereum at the point of sale for vending, then they can accept WISE, because WISE is on Ethereum. Or even if it wasn't that way, you cash out into WISE anyway, so you could just have a credit card, debit card that's paid for things in Ethereum. So I see in 2 years a world that has a lot more options to be able to live completely off of cryptocurrency, where people are taking money out of their banks and feeling very safe putting them in these decentralized ecosystems, because they know, first of all, that they're safer than their banks and they have more control than their banks. And hopefully in 2 years, we'll have a lot more options of being able to pay easily, just on your phones, like Apple Pay and debit cards and stuff, where you could just pay for stuff in your cryptocurrency. So the technology is already here for us to be completely unbanked and be completely using DeFi solutions for all our financial needs. And the opportunity is much better. Like, you can already make way better ROI than anything that your banks can offer, and often a lot more than what the stock markets can even offer right now. So I just see a world that's like where everybody has a crypto wallet and people are just using crypto for day-to-day stuff. That's what Satoshi wanted. You can't really do that with Bitcoin now, but you can with Ethereum.
Yeah, no, absolutely. And when this thing launches, we haven't really even gone into how people go and buy WISE, right? Yet. How do they actually buy WISE? And before January 1st, and then after that, where do you think the price is going to be when it launches?
Sure. So right now, in order to buy WISE, you need a Metamask wallet. That's like step one. So Metamask is a huge private wallet provider. So like they have over 1 million users. They're one of the most trusted brands in decentralized finance. If you have a Chrome browser, it's literally a plugin. You can Google Metamask plugin. The site is metamask.io. It takes like 30 seconds to set up your own private wallets. You just write down your 12-word seed phrase on a piece of paper and you're good to go. You now have control of your private keys, and you could take that anywhere. So even if your computer or phone dies, you can go to any computer or phone, download MetaMask, and with your 12-word seed phrase, be able to access your funds. So step one is getting yourself on a wallet that has its own private keys, where you control everything, not some exchange controls everything. And so we use MetaMask. And then step two would be getting some Ethereum so that you can invest. So you can buy it right in the app using Wire, and that's small amounts. And there's also like a premium on that. So you're paying a little bit for that service. If you want to do large amounts, you'd have to get Ethereum on an exchange so you don't get killed by the fees. So, whatever exchange you use, whether it's, Coinbase, Kraken, KuCoin, Binance. Binance is probably the best if you're going to use a centralized exchange. And then once you have the Ethereum, you would just send it to your MetaMask wallet, and then it's really easy to invest.
So, price when this thing launches January 1st. What are your thoughts about that?
Sure. So we're getting pretty close, so we can kind of see it. It looks like it's going to start out at about 11 cents, give or take 1 or 2 cents. So yeah, probably 11, maybe 12, depending on how much more Ethereum comes in.
Okay, so 11 or 12, and then people start staking. They start
Mhm.
staking a year, 2 years, 3 years. Um, I guess the hope is people stake longer because that's the belief, in the system. I'm sure we'll have some people that want to get out quickly and make a quick lick, but I think the understanding of it. You were talking about the adoption and more and more people learning about it through the referral links. Um, I think once people really understand what it is and why, in my opinion, it's a better product than anything that I've seen out there. I think that hold period will be long, and that price is going to shoot up.
Yeah, I don't like I haven't seen another community that I'm more happy with than the Wise community. You know, we've been building since February, and I feel like we have it's such a mature community, and they really come for the right reasons. You don't see the usual like moon boys that's all like memes and wanting to pump and dump and stuff like that. So we're gonna list at probably somewhere 11 cents. Like what the exact price is, it's the average amount paid during the 50-day auction. So we're most likely listing at somewhere around 11 cents. People paid like 17 cents per Wise yesterday. So there's a lot of people that want to get into Wise. And at this point, there's a lot of people that are saving back some Ethereum, hoping to get a better price on Uniswap as soon as it lists. So I expect there to be a pretty steady upward price action from as soon as we list. And if you were lit, and we're not taking the usual routes of having a pre-sale where you could get in super duper cheap and then list it at like 5x what the pre-sale was. So if people want to, they can just cash out for a quick 5x if they don't really believe in the project and stuff like that. We're listing at the average price. So there's not really an incentive for over 50% of the people to cash out at all because nothing has been made at that point. This period is just to gather as much Ethereum as possible to create this massive liquidity. So sure, it's going to hit the market. The market's going to do what it wants, but I'm very happy with the community, and I feel like the best prices to get have been in this auction phase, and that we're going to go up pretty quickly once we hit Uniswap. That's my feeling about that.
Yeah, and if you think about people that are still investing all the way up until January 1st, like I am, to me, the idea, the more liquidity we have in that from the beginning, is the better, and it's
Yeah.
belief more so in price from the beginning. It's the belief in what the technology can do.
Yeah, absolutely. Yeah, I totally agree. Like that's what I've been trying to tell people for 9 months, because it's like the bigger amount of liquidity we start out with, that just gives us longer legs to be able to reach a bigger market cap faster. So that's what I'm trying to tell people, and sometimes it's hard because people are like, well, if we start off with a big liquidity, doesn't that mean it's harder to pump? And it's like that. Well, you are used to a micro cap token that has less than $100,000 of liquidity that some whale can just easily manipulate with a couple $100,000 to make some pump and dump. And that's so much different than what we're doing here. And the more liquidity we start out with, the more chance we have of reaching those billion-dollar, $10 billion, $100 billion market caps in a 5-year time period. It's all about that initial liquidity. So I had no way of knowing how well this would work, and I am ecstatic that we have this much Ethereum in the contract already. And I couldn't have timed it better. Like no one could have predicted that we're going to have this Bitcoin all-time highs, huge bull markets, and I'm so thankful that like the cards kind of fell in my favor, because we've been building this since 2019, and no one could have predicted this. So I think just everything fell into place. The stars aligned for this one. We not only have a really good, really well-built product, but it also, the timing is with the bull market, and it's just produced some amazing results so far.
Absolutely. Well, Peter, it's a great conversation. I love your product. And anything you want to say kind of in closing here?
Yeah, sure. So the number one reason I created Wise was because I was a crypto investor and I was looking for something that I couldn't find because it didn't exist. So after about 3-4 years of frustration, I just decided that I was going to build it myself. And I realized that in building it myself, if I kept it pure, and what I mean is like completely fair, that I would have such a bigger potential for this to reach the investment tool that I wanted it to be, reach the potential to be that investment tool. So that's my motivation for creating this. And like, I just want people to know, like, I'm not backed by anybody. I'm just a guy who wanted to, like, saw the potential, wanted to invest in a product. I didn't see it, so I ended up having to build it myself. And so I think the community movement, like the grassroots movement that is springing up for Wise, is insane and really powerful, and I'm very thankful for it.
That's great. It's really fair. You know, that's one thing I really look at. It's fair in the future. If you're loaning money, it's fair banking. It's you're not getting ripped off by this giant system. It was set up in a fair way. The developers aren't getting a ton of tokens, and then the whole system is designed with that spirit in mind.
Yeah.
And that's powerful. That's why I'm going to keep staking all the way up until January 1st, and I'm just very excited to see this take off.
I have one more thing actually that I think would be really valuable to include,
Sure.
because some of the biggest questions I get are, what are the legal concerns? Is the SEC going to come after you? What are the concerns? Especially since I'm in America, I'm in Los Angeles. So what are the concerns of regulation and stuff like that? And so I have taken extensive lengths to make sure that I'm in the clear as far as it goes with creating a cryptocurrency that could be classified as a security by the SEC. And according to some of the best lawyers in crypto, we're not a security, but we could be classified as a security because the SEC kind of has the power to be able to, say, it looks and smells like a security, it's going to be a security. However, if that were to happen, we've got extremely strong arguments because of the way that it was created, decentralized, nonprofits, and it was a community effort all across the world, pretty much like Bitcoin was. Like, it's not like there's anyone that owns Wise. There's no company behind Wise. So if we get the SEC question, like I just point people to that, because yes, the SEC can do whatever they want. However, first of all, we've got extremely strong arguments, and also they have a whole lot more low-hanging fruit that are actually breaking the rules where we aren't actually breaking the rules. And two, every single part of Wise is made up of immutable smart contracts that have no admin keys. And for people that aren't tech savvy, that basically means that the rules that binds Wise are set in stone. They can't be changed. They can't be altered. If someone were to take down our website, you can still interact with the contract directly. You could go to Etherscan or go to somebody else who creates another front end. This is something that is as decentralized as Bitcoin and can't be stopped anyway because it's already set in motion and nobody can change it at this point. So that's what decentralized finance means. There's a lot of decentralized products out there, quote unquote, that are not actually immutable. They have God mode keys in the contract. They can change whatever they want, and they call themselves decentralized, but they're actually not decentralized. Wise is one of the few that actually is a 100% fully immutable, decentralized product with no admin keys.
Yeah, that's really what makes it, from the way I say it, the best. It is completely decentralized, and for those that know and understand what that means, that's super powerful. Talk about a competitive advantage. That is, it's. I really believe in this. So, very excited, Peter. Thank you so much for taking the time to talk to me. I hope we can talk in the future too about this. It's a fun conversation, and I really appreciate you.
Absolutely. Thank you so much for having me on. You know, I'm dedicating the majority of my time right now to spread the word. Like that is what I need to do, because the project, first of all, it's done. Like, yeah, I'm building second layer protocols, but it's done at this point. Like my time is best used explaining to people how it works, because it is complicated. It is detailed, and it's hard for people to immediately grasp why something is good and understand all the different parts. So I'd be more than happy to come on and do this. This was a lot of fun, and just thank you so much for having me on.
Okay, thank you, Peter, and thank you for watching the Nashville Current Podcast.